Hello there YouTube, welcome to my channel. This is the Frugal Investor. In this video, I am going to give you guys my opinion on why I think bank stocks are the best stocks to own in the year 2021 and 2022. And I'm also going to give you guys some suggestions on what stocks particularly to own in your portfolio. The stocks that are available at a good P by E ratio, good forward P by E ratio, less debt, more cash on hand. With that said, let's get right into it. The main reason I'm so bullish on banks in the year 2021 is simply because of the amount of cash they have on hand. Banks have been continuously buffering the amount of cash they have on their hand during this past year, during the pandemic, to safeguard their position against any recession or any economic downturn if it were to happen. Banks have been doing this and they have ramped up their process so hard that now they have more debt than they have loans. And this is a really strong position for any company whatsoever to be in when they have a lot of cash on hand and they have less loans, less debt and everything. So that is one of the main reasons I'm so bullish on banks being performing really well during this year and the next year. There is also another reason, which is their P by E ratios. Even with such amount of cash on hand, even with such a high moat and a buffer, the banks are trading at such great valuations. They are doing so well in profits and numbers, and even then they are trading at such good P by E ratios. It's too juicy to not look at, to not pick up banks during this market. For example, one of my favorite banks, which is JP Morgan and Chase. Currently, it has 1.30 trillion cash on hand, and they have a debt of $642 billion. So $1.3 trillion compared to $642 billion is a huge difference. During a recent stress test done by Fed on banks, banks were passed through extreme scenarios, with the economy being down for longer than 5 years, 10 years. And the banks survived and passed the test with flying colors. Soon as that happened, the bank stocks started climbing up. As soon as that happened, the banks they decided to do a share buyback to put more money in the pockets of their shareholders because they had so much cash on hand. They wanted to give it back to the shareholders, so they decided to do a share buyback, and that increased the stock price by at least 5% just in that day. Just in the past 1 year, JP Morgan and Chase, which is the largest bank in the United States, is up by almost 51% just in the past 1 year. Plus, it pays out a great dividend. They have so much cash on hand. They have such a high moat, such a high buffer in case of any wrong happening. Even if the economy goes down for longer periods of time, even if a lot of defaults happen, they can handle that. The second main reason I'm so bullish on banks is the P by E ratio. The current P by E ratio for JP Morgan is 17.35 and the forward P by E ratio is 13.41. This is extremely great P by E ratio. The stock is so juicy to not be picked up. So those are my two reasons on why I think banking sector will continue to do well in the year 2021 and 2022. Number one is they have so much cash on hand, so much more. Second reason is they're available at such good prices uh, that it is a great idea to add banks and financials to your portfolio. Now, moving on to the next part, which banks I think personally are the best banks to own, which banks are in the best financial condition and are the best choices to own in your portfolio. So I have three favorite banks. Two of them I currently hold them in my portfolio. The first one is JP Morgan and Chase. JP Morgan and Chase is currently trading at $154.09. They have $1.3 trillion cash on hand and they have $642 billion worth of debt. So they're in a very solid position. If we look at their top line, they have been constantly increasing their top line. During 2020, it went down a little bit due to the pandemic, but the top line has seen a constant increase. If we look at their bottom line, the bank is profitable. It is profiting. Last year, it profited about $29 billion. So this is a fabulously managed bank. If we look at their dividend, they're currently paying out 2.31% dividend yield per year. and the payout ratio is 32%. So there is a huge room for growth for the dividend. They have been paying out this dividend for the past 10 years, and they have seen almost a constant increase in the amount of dividend that is paid out to the shareholders. So JP Morgan and Chase is my favorite bank so far. It is the eighth largest bank in the world. If you are a dividend investor for the long term, this is the stock that you must own in your portfolio. And again, this is not financial advice. This is just for entertainment purposes. But this is a stock that you must own in your portfolio. The second bank that I'm bullish on for this year, which I think is a great bank, is UNB. UNB is a very small bank compared to JP Morgan and Chase. The market cap for UNB is just 137 million. The reason I'm so attracted to this bank, even with this bank being such a small bank, is because of their financials. Their numbers are fabulous. Their top line has constantly been growing over the past 10 years, from 2011 to 2020. If we look at their bottom line, they have constantly been profitable from 2011 to 2021, and their bottom line has also been constantly increasing. If we look at their dividend, they have a great dividend yield of 4.31%, and the payout ratio is 46%. So they have a lot of room to grow that dividend. They have never missed on a dividend in the past 10 years. Also, they have constantly increased the amount of dividend that they are paying out since their inception. Currently, they have $135 million on hand, that is cash, and they have $8 worth of debt. So that is a fabulous position to be in. That is a really strong cash position that they have held for themselves. This shows me that these people, they're managing the bank in a really smart way. And that's what makes me so much bullish on this bank. And that's why I decided to add this to this list. The last but not the least thing is their P by E ratio. Currently, their P by E ratio is only 10.75, as we can see right here. So this bank is available at a great price to buy right now. At a stock price of 30, it is available at a very cheap price to add to your portfolio. And this bank has a lot of room to grow, a lot of room to become big. So that is why I am very bullish on Union Bank shares. And I think you must own this in your portfolio, in my opinion, if you are deciding to invest in financials. The third bank that I'm bullish on is Capital One Bank. Within the past 1 year, Capital One has seen a meteoric rise in their stock price of 123%. That is a huge amount of growth. They have a stable increase in their top line. Only during this year, due to the pandemic, their top line did go down a little bit, but their top line has also seen a stable increase during the past 10 years. They have also been increasing their bottom line. During the pandemic, the bottom line did go down by a lot, but the bank is profitable, and it is making a profit of about 2.7 billion just in the year 2020. In the year 2019, they profited about 5.5 billion before the pandemic. Currently, they are paying out a dividend of 1.19% yield, and the payout ratio is only 12.62%. So there is a lot of room to grow. Capital One, I work for Capital One personally, and I have met the CEO, Richard Fairbanks, fabulous person, really nicely managed bank. Currently, they are in a growth phase. The bank is growing. They're moving everything to tech. It's more of like a tech company. So when you're investing in Capital One, you're not investing in a bank. You're investing in a tech company. They're moving everything to tech. They're reducing the retail banking space and trying to make it all in the cloud. Now, they have a lot of debt on hand as compared to the cash. They have 42.78 billion cash and they have 43 billion debt. Compared to other banks, it is not a really good position. The reason is they're growing. As I said, they're growing in the tech space. They're investing a lot of money in building out new products, building out new product lines, securing their portfolio, securing their customers, securing the customers' information. They're investing a lot in that. They have new buildings coming up for their new tech teams to work from. And I think they're in the growing space. And in the long term, I think they will do really, really well because they are almost the leaders of this tech banking, moving away from retail banking and moving to tech banking. And I am a huge believer in that, and that's why I hold this in my portfolio, and I'm very bullish on this company as well. So those are the three banks that I currently hold in my portfolio, on which I'm very bullish. Number one is JP Morgan and Chase. Number two is UNB, Union Bank shares, and number three is Capital One. And I think all these three banks, they are in a very strong position cash wise. They have really good P by E ratios, pays out really great dividend paying history, a lot of cash on hand, and they have been stress tested by the Fed. And they recently did a share buyback to put more money back in the shareholders' pockets. So those are all good signs that I think personally banks will continue to do well in this year and the next year. And that's why I hold banks in my portfolio. Currently, I own JP Morgan and Chase and Capital One. This is one of my favorite holdings. This is like putting your money in a savings account. So that was my opinion on why I think banking will do really great during this year and the next year. If you like this type of content, leave me a like, comment down below, and let me know what you think about this particular topic. With that said, thank you for watching and see you in the next one. This is the Frugal Investor signing out.